The Obama administration is pressing banks to pick up the pace of loan modifications for troubled homeowners. So far, only about 200,000 mortgages have been modified. The administration says that ultimately it would like to see as many as 4 million loans modified. Meanwhile, some say we've hit a bottom in the housing market anyway. So in our Call of the Wild, we ask, do we even need this program anymore? Let's bring in Shari Olefson, real estate attorney and author of Foreclosure Nation. We also have Steve Moore, Wall Street Journal editorial board senior economics reporter, and of course, our very own, very knowledgeable Diana Olick. Thanks to all of you for joining us. Steve, let me let you take first crack at this. What do you think? Do we need this program anymore?
Well, I don't think the housing, we're out of the housing crisis at all. But I do think that this program has never really worked very well. Not just because so few people have signed up for it, but if you look at the evidence of this kind of program in the past, what you tend to get is people have a loan modification, and then they pay their mortgage for 6 months or a year, and then they're just back into the same crisis they were before, and you don't see a long-run reduction in the amount of foreclosures.
Diana, what is exactly the problem here? Because I interviewed Jamie Dimon a short while ago. He said they were going to do 600,000 or so modifications if only 200 have been done so far anywhere. I mean, obviously, no one's close to the targets. What's the problem?
Well, if you ask the bankers, they'll say, look, it took a while to ramp up the program to get all the information from the administration, and the administration is continuing to change some of the forms and some of the reasonings. But one of the biggest problems that the banks are having in modifying these loans is that 50% of borrowers who are facing foreclosures right now will not talk to their servicers. And that's after the servicers are sending them letters, calling them at all times of day, and even going to the property trying to say, look, we can offer you a modification. The borrower doesn't want it, or the borrower doesn't talk to the servicer. So that's one of the reasons. Another of the reasons is that, look, this administration program was very careful in making sure that it didn't allow everyone to get a modification. As you remember, we were arguing months ago about who should and who shouldn't get one. Well, not everybody qualifies, and then finally you have job losses. If you don't have a job, they cannot modify your loan.
But Shari, wasn't this thing doomed from the start? All the academic studies are now showing that the redefaults on these so-called modifications are 50 to 70%. Right. All this government tinkering and meddling was a lousy idea in the first place.
Yeah, historically 60% of loan modifications don't work, but in this context we have a couple of other things in motion. There are a lot of pieces that are playing into this, and part of those are still moving. So the home prices, until these recent Case-Shiller numbers, which hopefully indicate that we're seeing some bottom of that, we're continuing to fall down. And the reasons driving the foreclosures were changing. Originally, remember, they started with the defaults due to those subprime teaser rates. Then we shifted more into defaults due to unemployment and the bottoming home prices and people voluntarily walking away. Now we're looking at almost allegedly 72% of foreclosures being caused by unemployment. So when you have a difference in the problem, there has to be a difference in the solution, and making homes affordable really is just being fine-tuned month by month since it was launched in February to address those differences.
And Larry, if I could just step in, the number that you're saying, the 50 to 60% of loans are redefaulting, that estimate from the Office of Thrift Supervision was based on old modification programs from the previous administrations. We currently have no numbers yet from the Making Home Affordable program, the Obama program, as to how many have redefaulted. It's barely 3 months old.
Why expect different results? I mean, you're right, we don't have the numbers
because
yet.
It's a different program.
I want to say something to applaud the Obama administration, though, on this. I think it's very financially conscientious for them to move slowly on this. Look, we're talking about taxpayers taking a hit here, because when the government steps in and underwrites these loan modifications, somebody has to take the loss. And I've always complained that there's an element of unfairness of this program to the people who are paying their mortgages on time. They have to pay more taxes for people who don't.
That's right.
And that's the catch-22, because this has largely been a voluntary program, which, if you want to call that part of the problem, you know, that depends on your view of capitalism and free markets. But because it's been voluntary, that's been quote-unquote part of the problem, is lenders don't want to take those risks.
My view of capitalism and free markets is a very positive view. I just want to say, the only thing I've heard that I really like from Washington, let them rent, Steve Moore. Why not, if you can make a deal let them rent for a while. That might work.
Well, let them rent, and you know, I'm still a believer Larry, that you don't necessarily need to have the government intervention here.
Right.
You bring
Let
the
the market
lender
work.
and
Let
you
the
bring the
market
homeowner together
Well,
and you renegotiate
the crisis
these
is
contracts.
over. The crisis is over. Come on,
but-
every statistic
but lenders
shows
are not
a
set up to be
bottoming. Every
landlords.
statistic
Hang on.
shows a bottoming. Every statistic shows. You look at these badly
Every
hit states.
statistic except the foreclosure numbers, Larry.
I understand that, but
Foreclosures and unemployment numbers.
No, but wait a second. The distressed sales have been coming down markedly. When you look at the worst hit states, California, Arizona, Nevada, Florida, you're seeing prices down, sales up, and the quantity of sales that from foreclosures is getting smaller and smaller.
Okay.
This is
Yeah,
a
but you know what, Larry? There are
turnaround.
other factors playing into that. I mean, some of those may be lagging indicators from foreclosure moratoriums. Some of that could be lenders retaining their REO inventories longer before they put them on the market. We don't have enough extended statistical analysis
I have
at
enough
this point
analysis.
to really know
We gotta
where
go.
the trend is.
My analysis
go,
is
Larry.
markets work.
Let her-
Markets work.
Let me
Let's
say
get
one
to
other.
it.
Can I say one other thing about this? We have to
No,
move towards.
you can't.
I think we gotta
have
go.
to move towards a situation of recourse loans. That'll stop the foreclosures.
That's true. That's a good point. I'm glad you said that. Now we're out of here.
That's
Thanks
scary.
for joining us, guys. We
Wasn't that
appreciate
great
it.
a point?